Hi and welcome to a review of the Dow Jones Cash Traded Through IG Index for Monday the 11th of August 2014. As you will see here, we've got a recorded live video of yesterday's trading session. Let's just take a look at what we've got so far. We had a buy signal here that wasn't filled, the market moving low with selling. That's what the red bars are, so we can see the selling coming into the market. This is confirmed as well with the very high volume. We see the market finding support, reversing with some buying back to the psychological level of 16,600, also known as a big round number, BRN for short. The entry price appears at 16,611, and across to the left we have some resistance. We see the market trading back through the BRN, then the buying coming back to bring it back, trying to hold, some selling coming in, eventually 235, the market opens at 230, we see the market being slammed to the downside, the selling coming in, buying, and now we've got the potential buy signal there. So if this market is to move higher, it needs to take out the resistance to the left. It's unfortunate that the entry price is also at this level as well, so we know immediately we're going to get some or possibly get some grief in this market. So what I'm going to do is just to speed things up slightly, as you don't want to have my interpretation of every single bar for the next 6 hours. That would be slightly self-indulgent on my part and extremely boring for you. So let's move things off a bit and just let me show you what's actually happening in the market. So we can see the market now trying to trade back through. It trades through. We've got a decent amount of volume as well, getting back through the BRN there. Resistance to the left, resistance to the left. So let's see how things pan out here. So the order is now being filled. The XXX and PTP have both gone from a clear diamond pattern and a circle to being filled with the light green there. So let's see how it fares. We can see the market now having hit the entry price and trading back down to the BRN. Resistance to the left, keep it in mind. In order to drive through here, we need to see an increase in buying. So the market doesn't know what to do, and a tip for you here is notice the increase in volume. The range of this price bar is far less than the previous bar, but the volume is greater. This means that there is some selling around in the market. It has to be, because the amount of energy that's required to move the market is a lot more, and what we're seeing here is that the market is trying to move, and yet the energy that's coming into the market isn't allowing it to move. So there's a resistance in the market. So we see this happening, and then we get the confirmation of the actual selling, and you can watch this unfold in real time and interpret this. And as we go through these over the next several weeks and months, and I teach you how to actually read the volume in the markets, what to look out for in real time, you'll be able to sort of predict what the price bar is going to be, or what it needs to be in order for the trade to be successful as well. So we can see that weakness at the 16,600. They want to desperately keep the market above this level. There's no doubts about that. This was evident from the start of the trading session. So we're seeing this here, where they're absorbing some of the selling even though it's coming into the market. So a bit more weakness. We're back through the entry price. The market's trying to move higher, but really struggling. To add to this, there was no economic news out today either, so the market was just left to its own devices, i.e. manipulation of the floor traders that still work in the New York Stock Exchange. And again, you can see the market there trading back down to the BRN. So let's just speed things up again and see what happens. The volume's dropped off, so the selling that we had earlier has abated at the moment. And again, we need to see this market trading above that entry price. The resistance to the left, always keep this in mind as well. So back to the BRN, through the BRN now. Good news here, if you're actually long this market, no selling. Even though the market's come back through here, what they're doing is testing to see if anybody wants to sell, because they're having difficulty in driving the market higher. So it's free to actually move back up because there's no selling around. and then we see the market again just finding support at the BRN but coming back through again, another test. This time you can see the volume increasing. Look how it's starting to increase, and then we see what is effectively known as a test. It's a blue bar, the market opening on the high, driven down and coming back on high volume, indicating that they managed to find a few buy orders down here, whether they took out the stops in order to buy these or new buying came into the market. Whichever it is, the market managed to come back up to, again, to the BRN, and let me just move this forward again. Following, we see the market move lower. Here's a tip for you: when you see one of these blue bars, as long as the lows following don't close below the low of it, the market will remain as a buy and a long. So again, let's see if the market has the stamina to move above the BRN. It does. We're not seeing any new buying coming into the market though, although the volume is starting to build there. Again, I'll just move that back, watch the volume, see how it starts to build. Not enough to confirm it as a green bar, but there's certainly some buying around in the market, which is what you want to see following the blue test bar there, and also above the BRN. Second signal for this market is now shown, but if you're already a buyer of the first one, forget the second one. See the market going through the entry price and then starting to move higher, and now we have the buying coming into the market. We still got the resistance to the left now. It's like a double top situation, and price is moving higher. So no buying in the second bar. We've gone through the resistance to the left, which is fine, but we do need to see an increase in volume if this market is to drive towards the first profit target, the scalp target there. And what I've done here is just reduce the narrowness of the screen there, just so that you can see where the scalp is. And this is the maximum that we could have expected yesterday. It's around 14 pips, 15 pips on this trade. You can see the market oscillating there. Just draw it back a bit for you. Got within around 15 pips of there you go, 14.8 for this trade, but unfortunately it didn't hold, as we see the volume building again there. And again, an interesting picture there, nearly the same amount of volume in the previous bar. Indecision in the market coming off the highs, a clue that we've got a potential problem there. So the market then trading sideways and heading back down now towards the BRN there. You can see this in just a second. More potential weakness. This is what's known as a telegraph pole. If you see this in the description at the top, you can't see it here because I didn't hold the mouse over this bar during the recording of the trade. So it's potential weakness coming into the market, again to alert you that there is some weakness around in this market. And again, a close below the low of this type of bar will indicate that we do have a confirmation of that weakness. So we're seeing the market closing below it there. Back to the BRN, will they be able to hold the market at this level? They're attempting to do so. We're back towards the entry price. The volume's dropping off. We're heading towards the late afternoon session. It's mid-morning in New York. So the volume drops off as the traders go off and have an early breakfast after having made a few dollars. We've now got an opposing signal. And when this happens, we will close out, if it's filled, we'll close out the buy and take the sell. So let's see what the market does here. We see prices trading sideways, and then we see the order filled. I'm just going to go back here. The order's filled because it's turned to bright red, but for some unknown reason, the automatic markup lines disappeared off the chart, and I think it's because it's an option that I selected to mark up the second trade, which I need to remove. So this is what should have remained on the chart, but didn't. So that's why the lines disappeared off the chart there. So we are now effectively short. The long trade was taken out. Let me just bring this back. 16,611, 16,660 there. So an 11 pip or point loss on the first trade there, mitigating the potential 32 points there. So that should reduce. So it's not a 32-point loss because we have an opposing signal which will take precedence over the existing one. So we've got to go below the BRN before this market, or for the market to move lower. And now we see this happening. We see the other buy signal being taken out there, turning to black because the market just doesn't want to go up. And yesterday, I think I've already mentioned, it was a very narrow range of only 70 pips on this market. We're seeing some buying coming back into the market here. And also I should just point out here, the reason this one wasn't filled is because it didn't qualify within the 3 bars following. So if the market doesn't fill the trade within 3 bars of the signal appearing on the chart, then it becomes unqualified and invalid. We're seeing this buying coming back into the market at the BRN and struggling this time, and we'll see the market moving sharply lower there. Around 30 pips now, 32 pips. We see the selling confirm this as well. Notice the high increase in volume. This is what you want to see when you are a seller of the market. You want to see selling coming into the market. And there we see some buying now coming into the market. You can see, I'll just wind this back a bit and just watch how the price bar develops here. It starts off in the lows, and then watch the volume as the market trades, and you will see how the prices came off the low as well. This is buying coming into the market. You can see it there. It's green, it's come off the lows, and there's some buying. However, it doesn't mean to say that the market will turn around at this point and move higher. There are certain qualifications that are required in order to confirm that it is genuinely new buying. And again, not just shorts taking profits, which if you were short, you have to buy back. So we see the market then moving lower again. And now we see the market being tested once more like we saw earlier. We have a second signal here, but we're already short from this top one, so this one is ignored. The market being tested at these levels. Again, you can see the buying coming into the market, so this should alert you. If you were short here, you can do one of two things. You can either take the profits, you can move the stop to break even. There's a whole host of management strategies that can be employed at this time. And again, more on those in future videos. At this time we see the testing, and again I'm just changing the chart over for you a bit, and I've added back in the lines here, the automatic markups, the entry price and scalp, so you can see. And at this point here we're at 28 pips, so down in this area we're going to be around 35 towards I would say about 35 pips plus on this trade. So that buying coming into the market has certainly stopped things there, and you'll probably see the market trading sideways and starting to move higher. And there you can see it. Again, the low of this bar is crucial. Any up movement now will require the market to show some new buying. Again, see the volume increasing once again. Not enough to turn the bar green, but we can see that there's some interest there to the upside following the testing of the market. Now we're at 1905, and as we head towards the well, it's actually later than that, it's more like 7:30, and I can tell you now between 8 and 9 in the evening it's very difficult to actually the odds of actually making money in the last sort of hour is quite difficult, thanks to some research done by Paul Marriott on the statistics that we've got so far. It drops to around about 25%, and this is what you'll see at the moment. You'll see how the prices become more and more sideways. Again, we see further testing there, the market being brought back. We now get a buy signal, and prices trading sideways. We've got the testing in the background. We've got 3 lots of testing now with the blue bars, so there's a good chance the market's likely to fill this trade, which it does. And then we see prices moving up towards the entry price there, and then we get a sell. And this is not uncommon in the last hour of trading. The market doesn't really know what to do. On most occasions, the market will actually sort of have its sort of last minute rally as people take out or close out the positions for the day, depending on which way the majority have been trading. But here we're just seeing this indecision in the market. So the long there of 12 pips could be taken out in a minute, with the short, which will be, the stop will be hit before the entry price of the short is taken in there. In fact, that didn't happen at all. The short was cancelled out because the market went back through the entry price. So at the moment, we're looking at 3 pips on the table. Our bacon was saved at that point. And now into the last hour of trading, or the last half an hour of trading. We can see we've got 6 pips on the table. We've had about 10 pips in there. Let me just drag this. It's do apologise for the sort of jerkiness of the screen, but when I'm recording this and moving the screen along, you tend to forget that it's going to create this when playing it back. But it's a small price to pay in order to actually see it unfolding, as opposed to having a chart that's got all of the trades on and not knowing why the trade appeared and how to actually handle it. So again, we can see the market coming back there. We're 2 pips now on this one, and the maximum on there 9. It's about 10 pips on this trade, and as I've said earlier, we've got going into the last half an hour of the trade, which you don't really want to be in because the market has already told you that it's been quiet today, only a 70 pip range. So again, to use that sort of discretion to say, well, maybe it's not worth it in the last hour. But we see the market there moving lower, and that would have resulted, if you had have taken the trade, in about an 8 pip loss on that, 7 pip loss on this one as well, even though it gave a 10 pip profit. So that's around about it. I think the market continues lower there through the entry price, and again offering 10 pips that way as well. But the market had already set a precedent really for the start of the day. It wouldn't drive through the entry price. There was resistance to the left, and once we'd come back through the BRN there, it was more or less game, set and match, and then just the market deciding to trade sideways. There were profits on the table, but I'm not going to say yes, there was you should have taken 10 pips there or 10 pips here, because that's impossible to do when the market's traded in real time. But on the whole, not a very good day, but there was around 40 pips in this one before the market retested. The good news is that the initial entry and initial buy signal, the loss was mitigated by 20 pips from 32 to 12, and there was a few pips around here, and again just a small loss on there. So a profit for the day, but nothing to write home about. But again, all things considered, 70 pip range, so a fairly quiet day. Right, that's it from me. All things being equal, see you in the next one. Have a great day. Let's hope that the market puts in a better performance today. No economic news out of any great note at all. Just some sort of employment opening job figures, I think, out at 3 p.m. this afternoon. Medium impact news items, so hopefully that might just give the market a bit of direction. So, as ever, thanks for the support, and I will speak to you in the next video. Thanks for watching.